Hey everyone, I'm Derek Hall, and I'm going to explain why the Federal Reserve is really bad for America and what should be done about it. First, here's a graph of the U.S. national debt from 1789 to 1971. Now, the Federal Reserve was created in 1913, so the blue portion of the graph shows the national debt before the Fed was created. The red portion shows the national debt after the Fed was created. Now, you can see after the Fed was created, the debt started to skyrocket out of control with the first two big spikes happening in response to the two world wars, and then it started to spike out of control again leading up to 1971. Now, the reason I stopped this graph in 1971 is because that was the year that the United States went completely off the gold standard. Before that year, the Federal Reserve and the gold standard kind of existed together, but in 1971, the gold standard was completely removed in the United States. Now watch what happens when we include everything up to the year 2024. Even the red portion is nothing compared to this green portion that shows everything from 1971 to 2024. This green portion shows what we get when we have the Federal Reserve and no gold standard. This is basically like an unstable system and about to explode. And there are people who think this is okay. This is unsustainable. And just for reference, here's the government website that I use to extract the data that I use to make the graphs. Now, I've heard the usual objections that people use to dismiss concerns about the national debt, such as, oh, it's not really the dollar amount of the debt that matters, it's the debt to GDP ratio. Okay, well, let's take a look at something else. This is another US Treasury web page that shows some information on the debt to GDP ratio, and it shows that our latest ratio is 123%, which is really high. Just to put that in perspective, the peak after World War II was 106%, so now we're way above that. Now there's some people who say that, well, we're still okay because there are some other countries out there that have a much higher debt to GDP ratio than the United States. Okay, so that's like saying, well, the whole world is jumping off a cliff, but we'll be okay as long as we're not the first ones. That's about what that argument amounts to. So later in the video, I'm going to get into specifically how the Federal Reserve has helped cause this national debt problem. But first, let's look at another major problem caused by the Fed, the cost of living, as measured by a price index. Now, this graph is based on data from a Federal Reserve web page that I'll show in a minute for reference. But the graph basically shows the same trend as with the national debt. After the Federal Reserve was created in 1913, the cost of living started to spike out of control. And again, I have this graph stopped at 1971 for the same reason as before, because that's when the gold standard ended. So now let's look at what happens after 1971. Again, the green portion of the graph shows the price index data from 1971 to 2024 when we had the Federal Reserve and no gold standard. So this basically shows that the cost of living is also growing out of control. And again, this is like an unstable system about to blow up. And here's the Federal Reserve webpage where I got the price index data for the graphs. You can see right here, it explains how the price index has been calculated at different times in history. And it just took all of these and linked them together in series. Now, those graphs were based on price index data. Those price index measurements often don't capture the extent of inflation that a lot of people experience from day to day. Here are a couple examples to show what I mean. The first row in this table shows that there was a 9% inflation in the CPI from June 2021 to June 2022. So obviously that's a 12-month period. But in that same 12-month period, there was 59.4% inflation in the price of gasoline and 64.9% inflation in the price of eggs. So maybe things are a lot worse than we're being told. By the way, if you're really paying close attention, you might have noticed that these CPI numbers are in the high 200s, but the numbers in the graph I showed went all the way up almost to 1,000. That's because the numbers in the graph were scaled differently in order to connect all the data going all the way back to 1800. But the numbers were still right. The important thing is the percent inflation over time, which is basically reflected in the slope of the graph. Now, it's also important to note that these inflation numbers are horrible because the Federal Reserve's target inflation rate is 2% per year. This is 9%. It's way over the Fed's target, although a lot of that was the government's fault back in this time period. So how does the Federal Reserve cause such big problems with the national debt and the cost of living? I have a diagram that can help illustrate that. So the government over here on the left side creates new debt securities, and sells them into the market and receives borrowed dollars in return. So that's how the government borrows money, and that pulls money out of circulation. And then over here you have the Federal Reserve creating new dollars, using them to buy debt securities and issuing those new dollars into circulation. That's how the money supply grows. Now, without the Federal Reserve doing this over here, the government would have to be a lot more careful about how much money it borrows, or it will pull too much money out of circulation and drive interest rates really high. So that's how the Federal Reserve enables excessive government borrowing and spending. And aside from these dollars going to the government, the Federal Reserve also sends its excess profits to the government. The government also collects taxes. That's more dollars going to the government. So the government uses all that money that it gathers and spends it excessively, sending the money back into circulation and growing the government really big. So that's how the Federal Reserve enables excessive government growth, excessive expansion of the money supply, and excessive inflation. Now, the Fed actually tries to achieve 2% inflation every year because they say a little bit of inflation each year is best for the economy. But it's not good for the individual Americans who have to deal with money devaluation and an increased cost of living. But the Fed and the experts don't care about individual Americans. They just care about keeping this big system going. But wealthy people actually have an advantage because they have plenty of money that they can put into investments that will earn them a return that usually exceeds the rate of inflation. Meanwhile, everybody else has to hope that their wage growth can match the rate of inflation. So this system here actually benefits the wealthy and increases the wealth gap. By the way, you can go to this website right here and see what has happened to the prices of gold and silver since we've had the Federal Reserve along with no gold standard. The Fed is run mostly by PhD economists who operate in a bubble and really don't understand business at all. The Fed is also an artificial market player that's not constrained by the usual economic forces of supply, demand, profit, and loss, because it can create its own money. So it can really manipulate the economy without consequence to itself. And the Fed's interference in the economy has actually made economic fluctuations worse. So this is what I think should happen. The Federal Reserve's employment inflation dual mandate should be totally removed. And the Fed should sell off all its securities holdings over a period of time. And then it should shut down its open market operations altogether permanently. And then there should be a gold or silver standard. Either one, silver might be more practical at this point in time. You can't do both, by the way. You can't do bimetallic standard because that doesn't work very well, but choose either gold or silver. Certain other Federal Reserve functions can remain, like the ones that report economic stats and so on. And by the way, this whole arrangement here will cause some temporary economic strain, most likely, but any major change to the economy would cause temporary strain somewhere. But the end result will be a fairer economy for all and a return to common sense, especially without a government that can just borrow and spend out of control. Thanks for watching this video. Also, be sure to visit my channel and check out my video on totally eliminating the federal income tax and replacing it with a sales tax. That video kind of goes well with this one. Thanks.